And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, April 12th, 2023. Today, I think we actually saw some advancement to the count. That's where I'm going to start. And I'm also going to begin here with the S&P. We've been working the triangle pattern and side by side with an additional, and they were actually dual preferred counts. And both were suggesting that we still needed a little bit of upside. But the triangle pattern, as we had been indicating, would find the resistance to complete at about 41.76, 77, with the throw over actually maybe coming in at about 41.88. We also had potential that the market could flip and just really keep going, which initially, when the CPI number came out this morning, I'm like, okay, here we go. But it really was a slow rise. It was a big push, but it was a slow rise, and there weren't enough algorithms participating. That's how I can put it. So it ran up and then started to come back down. And by the time we opened our regular session, the market was really starting to come off pretty strongly. Now, as I continue to talk forever and a day, we're looking for it to thrust out of the triangle. And again, we're going to be looking at that bottom side of the triangle is all the way down here. But this thrust, because of the nature of how large the move is, and what degree the move is itself, I believe it's just going to take some time. So I think we were off to a good start today. So I'm willing to change the count and mark it as the triangle completed today. Now, that's not suggesting that I'm getting rid of the other count, because this is just all very not very anything, to be honest with you, other than this nasty little C wave going on up. And we could put 3, we can put the 4 and the 1, the 2, the 3, the 4, the 5, just kind of diagonal up, but it doesn't really. But, you know, we've been working it for so long, and they've been testing it for so long, that now that it got there and it did reverse, I'm a little bit more comfortable in suggesting that it is done. Now, mind you, what sits on top of that E, intermediate wave E, is a primary B wave. So let me just flip out to the 4-hour chart. And here we have it all in place. And we see that we have A, B, C, D, E. Prior, I had put it down that this was like a 3-wave. And we could have had just an ABC-A, ABC-B, and we were in a C wave up. And I'm going to be honest with you that while we slid pretty far today off of that high, and I look at this on the hourly chart, I'm being left with 3. If it sticks and does not break that low at 41.12, which we saw right about at 3 o'clock, excuse me, I have been fighting the flu. So I'm going to try to mute myself when I get a cough, because they're vicious. So please bear with me on that. In any case, I am switching over. The market's attempted to pick up a little bit of ground, but they are now beginning to move lower again. And I'm not anticipating that we're really going to get much of a reaction in terms of continuing to drop, because we have, again, numbers tomorrow. We have the PPI. We have jobless claims. And then on Friday, we have retail sales and the beginning of earnings season. So it always seems that the markets are just going, oh, yeah, well, we got that number. We didn't like it, but hey, we're okay. We're going to wait and see what the PPI brings us. We're going to wait and see what the Fed governors say. But today, what came out this afternoon were the minutes from the Fed meeting, the last Fed meeting. And while they pushed a little buy button when it was announced that there were some members of the Federal Reserve Committee that were like wondering, well, should we even consider raising the rate even 25 basis points? And that had somebody pushing the buy button. But then the next part of the statement said that they were going to continue, that the plan was to conquer inflation, and that they were still feeling that the economy may be showing some signs of reacting to the interest rate rise, but not enough for them to start to do anything different. Now, I'm sure that there are also some that have gone, and there are some reports that are actually put out by the CME, the Chicago Mercantile Exchange, which is showing a chart of the interest rates over the period of time. And it is showing that while we climbed to 5% in the Fed funds, I believe it was March, we now are starting on a downslope, which they're believing by the end of this year that will be at 4%. So it's basically 100 basis points lower. And so there's so much information being tossed out there. And this is not an analysis. This is an algorithm that functions just to show the movement and then project out. So if it's taking data from when they were holding the rates artificially low to it, I think it becomes a little bit harder to really determine what's coming in the future when we're not really certain of what's going to happen within the banking sector, what's going to happen with inflation, what's going to happen with the different things that we're confronting, what's going to happen on the geopolitical, et cetera, et cetera. There's so many things that are still totally unresolved. So, but enough people get that, they start saying the narrative that the Fed is intending on lowering the rate 100 basis points by December or the beginning of 2024. So to that note, I say it all may be possible, but what's going to happen now is, as I have pointed out, what did this complete? A primary B wave, right? There it is. So we're looking for a primary C wave down. Let's start building what we can start to put together as initial fib levels for primary wave B. So what I'm going to do, I'm going to use my extensions, and I go up to the top, and I go down to this low, and then I bring it back up to this high. Excuse me. So what are we looking for? A primary C wave. Primary wave C would be equal to primary wave A if all of this stays pat. So in other words, these don't shift. There's still a possibility that they'll shift higher. I'll get into that in a minute. That we're showing that the completion of primary B, that suggests that we're going to start heading lower in a primary C wave. And on that note, primary C would be equal to primary A at 2871. Now, we know, because we've done some work with the SPX, to show that if we're looking at the entire supercycle wave 4 correction, that its first level, its 0.382 level of that correction is 2980. And that one's held pretty firm for a while to sit right there. And that's taking, via the SPX, the 1932 lows to the 2022 highs. So we've got that. But if we're really in this primary C wave, what really could it do? Well, I'm just going to move this out one more level so I can show this. We're really looking for it to come maybe as far as 1.618. Now, I know there's a lot of people that be like, oh, come on, that's not going to happen. How can it happen? I can't tell you right now, but I'm going to tell you that it's a very natural retracement level for a corrective phase. And now we're looking at it on a primary degree. So it makes sense that primary wave C could end up down inside this price range where we had primary wave 4 on the way up. So that would put all of these into force. So we have 100% at 28.71, and then we can just walk them down. Now, you're going to maybe think, oh my God, no, there's no way we can get there. But I need you to just really consider, how did we get up here? Cheap rates that started back here in 2008, 2009 with the financial collapse. So if we look at that level and the percentage that the market declined, we can now take it up to the full and use that same percentage, excuse me, to determine that it is possible for the market to come down here, rally, and then sink like a stone all over again. We have a lot of time in front of us that I believe that this correction will take. And I think that what we're seeing is basic impatience, or just like, why would it need to go down there? The Fed can just, provide liquidity to get us out of all of our problems. And they can't. They really can't, because they'll bankrupt the country. We'll go into hyperinflation and things will just implode on themselves. We can't continue to toss money to keep our interest rates low, to force cheap money to be present. So, excuse me. Sorry about that. So anyway, I'm thinking we can start to come down, but it's going to take time. It isn't going to drop in a day, in a week, in 2 weeks, or a month. It is going to continue to drop, but it's not going to reach these lower levels for quite some time. We've got 6, 7, 8, 9 months for this to really occur. Excuse me. And it can really happen while interest rates may be declining. There may be an economic period that will suggest that rates can even out and come down a little bit, but the market, their reaction should be still moving lower. If we're moving into a recession, if we're seeing the dollar just kind of go into a collapse, there's several things that really would suggest that, the bond market can go up and the equity markets can go down. That's all out there, and it does exist. So for right now, I'm going to come back down to that hourly chart. With this count in mind, as I said, right now, it's 3 waves. We are inching our way down. That could be telling us that it's 1, 2, and we're in the third. And believe me, it's a minute 1, minute 2, a minute 3, and a minute 4, and a 5, and then it's minor wave 1. And again, we're working down on a primary degree C wave, which is going to consist of 5 waves of intermediate degree. The first level being minor. And I'm not going to label this minor 1, minor 2, minor 3, minor 4, minor 5, unless we really kick in and we start collapsing below all these levels. So I'm starting with the minute. But I would like to have a little bit extra confirmation by the S&P forming 5 ways down. Now, in lieu of that, can't tell you what they're going to do tomorrow with the PPI and the unemployment. Can't tell you right now where they're going to try to pin the 0 DTE options tomorrow. Today, they continue to play. They continue to roll it around. They continue to go up and down between 41.15 and 41.25. So as long as that continues, we're going to sit in limbo. If we get enough seriousness in the news in terms of our economic numbers, then maybe we'll get a decent slip lower, break the 4,100, break below what we would call some of these put walls in the options, et cetera, and then really start to break down. And what it also does in effect is it moves the entire box of value for the options down. So we'll be looking for that as well. And that will also assist in the market continuing to head lower. But I cannot, at this point, if we turn and overnight they start buying it up and they bring it back above 41.56, we may still then get up above here. We have 41.88, 41.93, and then we're up to 4,200, 42.25, 35. We have them all the way up. And that could still be in force. I have to think that it's got to be supercharged in terms of the numbers have to be very, very convincing. And initially today, everybody thought it was, but it went up on no volume. It truly did go up on no volume. And the actual CPI wasn't anything to go like, wow, that's a major improvement. It truly wasn't. So we'll see what tomorrow brings. But now I'm beginning to look for additional downside. So again, let's kind of move this out just a little bit and see if I cannot put in there's that, and that gives us this. But now we want to get the start of this whole wave. And I need it to go a little bit more before I can really determine. So I can put in some, but to put in fibs right now, it may be misleading, but it could be where the market may find support during the day. So I'm looking, oops, that's not going to work. Let me take that off and start it over. Go back to that high, and it does it again. All right. All right, this is not going to work. And it's just not going to annoy me, so I go here and go like that. There you go. Sometimes you got to anchor it and you got to show it. So this just tells us for this E wave, where can we find support coming off? If indeed the highs are not in yet. So right now we are sitting right at the 50, the 4-hour 50, and then we have 40.94. We have the 200s wrapped around 40.45, and then we break rather quickly. So remember, a thrust gets us below 4,100, gets us below 4,000, and fairly quick. And that can happen. That can happen pretty quickly. The indications are that it's there. On the 4-hour chart, it shows us that. If we bring it down and we move to the hourly chart, it's going to show us the same thing. We start to fall into a little bit of a black hole. Right now, in the hourly chart, we're sitting and hugging the 200 moving average. So it could really start to drop. And here's where we get our support. Once I start to get some additional levels, then I can start looking at, for example, if we're inside that third wave, and I don't want to jump the gun and say what we are, but you would connect. Oops, that's not going to work. I need to do that one. You connect today's high to that initial low and then up there to that top. Now we have additional levels coming off. Right? Where if this is just an ABC or 1, 2, 3, if it's a 1, 2, 3, I'm looking for it to come down into here to put a third wave in, a smaller third wave. Well, we have 100% of 40.97, then we have 40.94, and we have 40.84, 76, 62. And that's a level where the wave 3 could certainly find its footing tomorrow. We do a little 4, we come back down, and we end up down into here. So it all exists. So we're just going to keep a close eye on it because, again, I cannot say with 100% certainty that they won't stop, turn, and run this thing back up again. I really can't every time I do it. But what I did do is to kind of put the challenge out. It's like, okay, I'm going to say that that's complete. Sometimes the market will come back and say, oh, yeah, you think so? And boom, and goes up. So that's why I'm telling you right now, the alternate would suggest we still have room to go to the upside. All right, let's go over to the NASDAQ. In the NASDAQ, it truly is the same story. Again, I pushed it around. I did what I didn't really think was going to be good, but here we did the same thing where it was like, wow, it's just not lining up. So I marked it complete at that high, 13,348.49. I marked it as complete. And as I spoke yesterday, one, we're in a minute degree, right? We're looking for 5 waves down. On the hourly chart, we already did get it, but I'm just labeling it as minute 1. Then we got an extended ABC up here to 2. And now same thing, we're dropping in a possible minute 3rd wave. Again, not as pronounced as the S&P, but still. Now, we saw the tech fall prey after a stunning opening, right? They had Apple back above 162. They had a lot of these stocks up reaching for the rafters. So it's still in line to just continuing to drop lower. Let's start trying to fill in these blanks. And one thing that I can do, I'm going to push these back over here a little bit. I'm going to just go for a wave 3. Let's start with the little amount. And then I'll add those others in a moment. And that goes up to that high. So all in all, the market did. It topped at 13,241, 242. It closed at, well, it's trading right now at 12,933. So when you put that together, that's quite a big move. It's quite a big move. It's 200 something down, $300 off the number this morning. Pretty good rejection and a continuation. But we have support right where we are right now, 12,933, and then we have 12,847, and that's where this 3rd wave would be equal to this 1st wave at 12,847. I would suggest that we go much further and looking for 12,603 for the small 3rd, do a 4 and a 5, which likely starts to bring us down here. Again, remember, we're counting a minute degree 5-wave structure to put in minor wave 1 of intermediate wave 1 of primary wave C. We're just beginning. But again, as I said in the S&P, same thing stands in the NASDAQ. They could turn this thing around and just go wrestle it all the way back up. And I'm not sure that I can start moving this 4 over and keep pushing it around. It just gets to be too big. So I'm going to leave it right here. That's another reason why I put the completion points in. We'll see how it goes. But it does still have the possibility. I'm not saying it's going to, but we all have now witnessed these big turns on nothing. They just do it. And so can't say that it's all going to be over. Because again, got CPI, did not say necessarily what they wanted. That's fine. We'll wait and see what we can do for the PPI. We'll see what the jobless claims do. We'll see what Friday's retail sales numbers show us. We got a bunch of Fed governors talking tomorrow. We'll see what they have to say. And we also have the banks reporting on Friday, some of the bigger banks. We have Citigroup and we got JP Morgan reporting on Friday. We'll wait and see what they do. It always seems that there's one more little piece of information that they think they need to put their puzzle together that we should be going down. We'll let them have it. All right, that's as far as I'm going to go because my voice is going. I'm really going to start to cough. And so we have upside. We have those same levels. We have 13,348 to the upside. First, we have 13,242, which was today's high. And then we have 13,348. We have it up to 13,450. And then it does go up. We have it all the way up to 13,900. We have it all the way up to 14,000, as I showed you before. I'm not putting them back in right now, but they are there. We'll wait and we'll see. Our next update will be on Thursday, April the 13th.